everybody, happy Sunday and welcome to episode 4 of the Stock Trading Pit Season 4. We have 4 segments to go over today. Segment 1 starting with Talking with Traders with Dan and guest JTrader. Segment 2 is going to be the Broad Market Review, going over the broad market ETFs as well as crypto. Segment 3 is going to be the Watchlist with our guest Xavier Bell, aka JuicyTradez, and myself. And segment 4 is going to be the weekend chart requests that we always do on Twitter. So sit back, relax, and let's jump right into it.
Hey everybody, welcome to another episode of Talking with Traders, where we get to know the people behind the trades. Today I've got a great guest with me, the famous JTrader, or Joe. Joe, thank you for being here. Welcome to the show.
Thank you very much. Pleasure for me. Thank you.
It's a pleasure for us to have you here. We're grateful that you'd come on. So let's hop into it. I've got a whole bunch of questions for you and not a lot of time, so let's get going. First question. How'd you get into trading? What brought you into this world?
Everybody was making money. I remember that I was still in high school and I was seeing my older friends. They were basically in Italy looking at the newspaper, investing. And then I remember my older friend bought like a nice Rolex with the profits. And I said, wow, seems like so easy. So I started like betting some money with my first account. It was like 18 and a half, 19. And I remember for this money, I worked like part-time after school, a little bit in the summer. The fact is, after 1 month, I lost everything. So it was the moment that I decided to start studying. And basically, I just loved, the markets, the finance, the news. I think it's so exciting. So this is really like how I started from a first big loss.
I can relate to that. I also, when I first got into trading, got creamed right away. And I was just like, oh, okay.
It seems like so easy, everybody, even now, crypto, Bitcoin, Dodge, or news pumps, everybody seems like making money. The reality of facts is that everybody's making money until everybody's saying that he's making money. When you don't hear them anymore, is a time they blew up or they lost everything and more of what they earn. Being a mentor, I heard so many stories during these years, like how many traders, for example, they were up following a news, maybe, I don't know, like GME or MC or others. They made a bunch of money. And then because they didn't have any kind of skills or preparation or knowledge, they lost that money they earned and more instead of saving, putting something more, um, for the life or buy an apartment, buy a car, whatever.
Absolutely. They say there's a common saying among traders, anybody can make money. The test of a trader is whether you can keep it.
Yeah,
Right.
exactly.
And it seems like a lot of these new guys who flood into the market during these GME, these short squeeze pumps, right, are in it for the reason of making a statement, right, like against some nebulous they or some hedge fund versus what they should be doing, which is managing risk and planning their trades.
Absolutely. Absolutely.
So tell me, what's your style of trading? Are you a swing trader? Are you more of a scalper? Give us kind of the high level.
Okay. I believe that first you have to test yourself because when you get to the market, you really don't know what your personality is for the market. What is your attitude? So you have to try basically everything. And personally, I'm a day trader. So I don't really like too much scalping, but I don't like to hold position for a longer time. I focus my trading from the morning to the evening. It can last 5 minutes, maybe 2 minutes, or maybe like 6 hours. Then you have those occasion like situation where a trade intraday can become, overnight, maybe 3 or 4 days. But generally, I would say average time is between 30 minutes and 2 hours per day. I like to keep my risk under control. When I was trading before in another market, I was basically holding a lot of position with size overnight. And sometimes I really didn't have like really good sleep or good time, especially if I was down huge. And I don't want to have any more that kind of stress in my life.
Yeah. No, we trade to live. We don't live to trade, right?
Yeah, somehow.
Somehow. So, what kind of indicators do you like to look at? Are you one of those people who likes to keep their charts very clean, or are there some indicators that you like to use?
Okay, I always say KISS, keep it simple. I still remember the first time that I was introduced by Ken Calhoun many, many years ago to keep it simple. The least amount of indicators you use, the better it is. Personally, I've been back testing all the indicators out there, all the platforms, and now I basically reduced my indicators to a few moving averages, which why they are important, because there are some moving averages that are like uh, recurring in time. So the point that these moving averages are touching over time, based, for example, on numbers of Fibonacci or others, they are simply amazing. And I can see this repeating over and over. So that Fibonacci, and also you want to be looking at what every other trader looks at. So you want to be looking at VWAP because you want to know, okay, the amount of traders, where they're going to stop. They're going to stop probably below an important support, below the VWAP, below a big hole around the number like 5, breakdown of 5, everybody will get out.
Hmm.
And that tells you also, okay, who is also watching these indicators? If you will stop at 5, don't you think that the algos the market make will probably trigger that 5 on purpose, make a fake breakdown at 5, going maybe 480, 490, and then reclaim. So he's absorbing more shares and then push that to 6 or 7. So you have always to think who is in control of the market and who knows your strategies.
Smart. It's interesting that you mentioned looking at the indicators that everybody else is looking at. My interview last week, Blamey with King Street said the same thing. And I think it's a smart point because a lot of new traders try to outsmart the market, right? They're like, I don't want to use a 20 period SMA because everybody uses a 20 period. I want to use a 27, right? And, they're not really outsmarting anybody by doing that. I firmly believe that you're right in that you should use what other people use because that is part of the power of technical analysis, right? It's this self-fulfilling nature where, everybody thinks the 200 period MA means something, so it means something, right?
Exactly, exactly. There are some indicators, like you said, 200 GMA, the 50. You know that the institutional will use it. You know that often on a trending chart, intraday 5-minute chart, 9 MA will work good. 20 simple moving average will work good. But also, you have to know that does this really give you an edge, and for which reason? For what kind of strategy are you using it? So it's all like relative. Personally, I like much patterns. So my strategy is formed by patterns, by back testing the market. If I see something that is happening over and over on a long period of time, for example, I'm just saying something like that, like a fake breakout at the open of a certain type of stock with a certain type of liquidity, of a certain type of volume, then I'm gonna track that trader maybe like in the beginning paper, started trading that small, and then like started trading it with more size when I have conviction with this.
How do you, I'm curious, how do you manage your risk? Do you use a hard stop or a mental stop? Because you're right. If a obvious level to trade against is at $5, the stock will often wick below it and take out stops and then keep going. And that's probably an algo or something out there that's playing on the obvious place to the stop would be. So how do you avoid getting wicked out when you're in a trade?
There are two things, but I believe it's true. One, often in very manipulated stocks, especially this happens when you have huge amount of volume, when you have flow rotation, when you have those stocks that are running like 200-300% a day, you will have like algos stop hunting you. So if you place not your 200 share order on the market, nobody gives a damn. But if you put like your 5,000, 10,000, 20,000 share lot on with a hard stop loss, surely it will probably try and grab you. Like they were using on CFD in a more different way.
Hmm.
Personally, I say if you're a beginner, use always hard stop losses because you don't have like the discipline to get out when something is not working. And maybe you will go add to your losing position, ending with a bigger red day. What I don't use hard stop losses. I just have discipline. And when I don't have discipline, I lose big. So you have
Hmm.
discipline traders. And with that kind of trading environment, so very fast trading environment, often you don't have a time to set a hard stop loss. So there are like certain type of orders that as soon as you enter, for example, you have a 20-cent stop loss immediately, or you can just simply exit your position when the trade is reversing and you want to stop out. Even there, how can I stop out? If you have like a short squeeze, there's no probably limit order that will get you out at the price you want. Because let's say $5 breaks down and we're all long. So it's me, you, and another 2, 3, 5,000 traders maybe that want to stop out at that level. So who's going to win? Instead, if you use a market order on a stop loss, that's I call emerging order, for sure you will get out. Slippers for sure. So I prefer sometimes to get out before that breakdown. And maybe if that's not going to occur, so if we're not going to have a breakdown, I'm going to re-enter my position, or otherwise scale out and re-add.
That's smart. Yeah, I deal with it differently than you do, right? I have a rule, and I'm more of a swing trader, right? So I stay in things for a few weeks usually, right? But my rule is I will never take a stop until closer to close, right? Because that gives it time to come back. My losses are bigger, but I end up getting stopped out less frequently, right? Because you end up with a big hammer, right? And you would have sold at the bottom. But I definitely agree with that advice. If you're new to trading, you should use a hard stop because it will give you discipline that you probably don't have on your own. Do you have a preference? Do you trade a particular sector? Do you like some people like biotech a lot? Some people don't care what they trade. Some people only trade one or two stocks, right? And they just, really know like SPY very well. What kind of industries do you tend to participate in?
Okay. To answer, I like certain products. For example, when I trade big caps, I always trade the same 7, 8, 9, maybe 10 stocks. Tesla, Apple, Netflix, BA, Baba Bind. The most volatile, most liquid, and generally the one that have like best options. So the most liquid options. If I see something that didn't trade the previous day, at least 6, 7,000 contracts and options, I'm not gonna trade it. For small caps or big caps, there's a rule: volatility and liquidity. So you don't want to be alone with the market maker because that happens.
Yeah.
And you don't want to have something that is not like having range. For example, look how many days Tesla is running. Look how many days Tesla is like ranging between like maybe the previous high and previous low day, inside previous day range. And look how many small caps are having 2, 300, 500 million volume trading in a day. And they are maybe going up and down 200% in a day and then back down 50, 70%. So you want to make money fast in a day. You want to turn your account, growing like 200% in a week on your account. Then you have to trade volatility, like momentum trader. This is really what I look at. That's the reason why each morning I focus on the biggest gappers, or on the best trends. Like these days we're having like YON or LEDs or like AMC or GME. These are the type of stock that everybody is trying to catch. Also, I would say the most difficult ones to nail.
They are, right? The more crowded and popular a stock is, the harder it is to trade it, right? The higher your chance of it doing the opposite of what you and everybody else expects are.
Exactly.
So you mentioned early on that you do some mentoring, and I know you run the small cap room. Maybe you can tell us a little bit about JTrader.co and your mentoring and how you work with new traders.
Yes. So basically, I have a room where I show what I do each day in live screen sharing. And we have, I would say, a formidable amount of traders. And I share them, not fake ones, but I share them with their Twitter name, people like showing their profit, their statements. And the reason why the mentoring is working is because you have to put a lot of work in. So it's about the strategy. It's about what you give to the traders. I'm here also Saturday and Sunday working with them, having like class one-on-one directly. So I really coach them from the A to the Z, but it's also, I require a huge amount of work. If you come in my room to follow alerts, I won't respect you. I mean, I will respect you. I will tell you what to do, but my room is not a room that, you follow breakout buy at 5. No, it's not like that. I teach you how to day trade. And we're having like 6 and 7 figure traders this year following the momentum that we did. And I made like some videos on YouTube of real people like Pilot Trader, like Bus Trader, like Kyle, and other great examples. But how to become a pro trader, it's about really what you put, the work you put. I still wake up at 4 a.m. each morning. I I go to do some gym, and then from basically my 9 o'clock in the morning till 9 o'clock p.m. or midnight, I stay on charts. So this is all I do. And you want to have success is this. Everybody has family problems. Everybody has somebody in the house that has an illness. You have maybe a job, you have kids, you want something, there's no excuse.
Makes sense. Yeah, I agree with a lot of that. In fact, like I think the main difference between traders who do well, right, besides discipline, and those who don't, is the ones who put the homework in at night, right? Almost every trading decision I don't make it during the day when emotions are hot and the market is moving, right? I plan it at night, right, or on a Sunday, right? Do your homework and then implement your plan. And I think that applies no matter the style, right? If you're a day trader or a swing trader, right, it's the same planning, right? Like, I'm going
It's
to
the
buy at this
same.
level, I'm going to sell here.
There are
um
so many, if I can add, there are so many good strategies that work,
mhm.
uh, and nothing is guaranteed in trading. So it's not that you start trading like another job, you will learn it, you will become a trader, because there are so many, I would say, extra things like being disciplined, following the rules. I mean, every strategy in 1 or 2 months, you will learn it, master it good. But then it's about you and who guides you, covering your risk, managing your position, adding size. You know yourself. You're trading your strategy. Maybe when you trade like 200 shares, that's fine. You go to trade the same Tesla, I would say, setup with 5,000 shares. How many things in your mind go on? When you have like position, you're making so much money, you cut it. And basically, maybe that would have give you like 3 times more. And that 3 times more of your profit, if you don't stay for those 3 times more, the next time you have a stop loss, you will say, okay, now my R don't work because that would need to be covering my stop that I have right now. So you have to be like a
Mhm.
robot. You have to follow discipline, playbook. And my training is basically exclusively on stats and what really is back tested. So I believe that's the key trading now, 2021. Not too much, only following price action. Price action is good if you follow and
Yep.
you are only a scalper. But if you are a day trader, if you are like a swing trader, then you need something more. You need a tangible back test stats that your setup works, for example, 78% of the time with 3 hour return average. So you know that you can size. Without this kind of edge, which is confidence, conviction, you cannot size. I will never risk money if I don't have a guarantee that it will pay on the long run.
Absolutely. And I think that's smart because, like you mentioned earlier, a lot of people are looking for shortcuts, right? They want to join a room and just be like, buy here, sell here, right? And I think what you're saying is very true. Let me ask you, because we are running a little bit low on time. I'm going to get yelled at here if I keep going too much longer.
And I have to
So
go train a little bit.
looks like you don't need any more of that. But I'm curious. Let's say you meet somebody brand new and they tell you, Joe, I want to get into trading. Besides getting a good mentor, because I think everybody needs a mentor. But besides that, what advice would you give them? Like, what's the first thing they should think about in their head?
One, open a paper trading account.
Okay.
Second, start to observe the market, study everything out there, every single trade out there, and then try to define a strategy. When you define a strategy, you will probably define like 20 times, 30 times, 40 times, you will make this process because you will see that a lot of these strategies won't work for you. Basically, you're trading, let's say, a long setup. For you, maybe it works. For me, I'm not able to trade the same setup because I'm not with that attitude, with that
Mhm.
personality, with that risk, with that capacity. So these are the first two things. Only when you are like confident, and this for me means do 10 green days in a row, green, okay? And then you can go live. This is really my test when I start like mentoring traders. If you can prove me 10 green days in a row, then you can start live. Surely won't pass like trading Tesla from 20 shares to 2,000 shares. That's simply crazy. You have to build a process little by little. And the majority of the traders I mentored, they had two main errors they were doing. One, they have no patience because everybody wants fast money right away. Everybody wants the Lamborghini. Everybody wants, no, trading is not like this. Trading is like being responsible, being professional. It's a job. Then other things will come with time. Don't worry about that. And the second thing is not having a risk. They simply risk too much. You know, I cannot risk three to get one. You will lose.
Mm-hmm. Yeah, even if the odds are in your favor, one loss and you've wiped out a lot of gains.
Yeah.
Well, very cool. That's perfect time. I'm getting yelled at in my ear right now. So Joe, thank you for being here. For those watching, we're going to put in the description below a link to Joe's website and his Twitter account. It's jtrader.co and jtraderco on Twitter. Joe, thank you for being here. It's a pleasure to get to know you. I hope you'll come on again one day.
Thank you very much, guys. My pleasure. Thank you. Love you.
Alrighty, let's look at the broad markets into the week ahead, and what an absolutely beautiful close on Friday on pretty much everything. Starting with SPY, we've been watching this all-time high resistance. Initially, this was all-time highs back in May. We tested it back in early June. We tested again earlier this week and finally broke out. And so this is something that really is going to change the status quo in the market. As you can see here, we're in this broadening formation. If we continue up, you know, this 430 area is very much possible in the next couple weeks if we can continue to get that momentum. Now, on the weekly side of things, you can see that kind of supported by this huge volume shelf here, which is becoming a launch pad for price. And we do have that alert set here on the resistance above anytime the price gets anywhere within this purple area. So all in all, SPY is looking very strong. Now, on the bearish side of things, remember, you can't just look at the market on one side. Even though it looks very bullish, you have to look at the other perspectives as well. One of those perspectives that is interesting and something that did come up in May is the seasonality on the week of year side of things. So you can see here that if we look at the seasonality, we talked about the seasonality for the week of year in the, I think it was the 19th week of the year. It had a 0% win rate. And we actually brought that up afterward because I didn't really even know that we had a 0% win rate week coming up. Now we do have another 0% win rate week coming up here in the next 2 weeks. So next week has a 60% win rate. The week after that has a 0% win rate over the last 5 years. So that is something to keep in mind, that seasonality in the next 2 weeks, we are going to drop off kind of a ledge here during the 26th week of the year. So on the bear side of things, that's something to consider going into towards the end of June. But for now, really setting up strong. I mean, could we melt up all the way to this broadening formation resistance next week? It's possible. We've seen it before. We'll just have to see. Going into the Qs here, very similar setup here. We were talking about this volume by price last week, and we were talking about the supply zone above. So if you remember, we were talking about this little area highlighted in yellow. This was our volume gap. We were able to move very quickly through it right up to that 339 zone. It took about a day to digest that supply. And you can see into the weekend, we did have a nice strong close on Friday, actually peaking its head above that supply zone. So if we do continue up, we've got that 345-ish resistance above. As always, we talk about these diagonal resistance and support areas being a function of time. So if we went straight up on Monday, 345.31 or so around there would be the target. If we kind of lollygagged around for the next 2 weeks and moved up, it could be closer to 346. So it really just depends on how quickly we move up from here, but definitely a strong move through the supply zone. On the weekly side of things, this is just one of the more bullish charts I've seen in a while. Look at this beautiful ascending triangle that we have here. You can see here that we're right at this previous all-time high, barely below it. So if we do break that 340-250 area, that could really bring in some new buyers as we do break to new all-time highs. Same thing on the Qs, the 26th week of the year. Let me just confirm that. So 26th week of the year also has a 0% win rate in the net over the last 5 years. So keep this in mind that over the next couple weeks, we are going into this weird 26th week of the year, which has that weird seasonality. If you remember back in May, we just had a horrible week that week. I don't know where these 0% win rate weeks come from. I don't know if it's some type of rebalancing or whatever the case is, but do keep that in mind. And that would kind of align with this resistance. If we did move into the next week, we would be right at that resistance if we moved up to around 345 in the coming 5 days. And then we're going into that 0% win rate. So this is how you can use technicals and seasonality together on TrendSpider. It's a great combination. Going into IWM, small caps doing their thing. They broke out of this longer term, or I'd say medium term symmetrical triangle here. So if we turn off the volume by price, you'll see here that we did break out of this long-term resistance. You can see here that we perfectly tested the previous resistance acting as support. And then one thing that I really wanted to bring up here on the day of the week side of things, if we look at the 2021 seasonality, not only did we pull back, retest this resistance, now acting as support, but then we were going into Friday with a 73% win rate. And so we had the technicals there, previous retest of the breakout zone, retest of the previous breakout zone. And then on Friday, just an absolute gap up and go. So seasonality and technicals really in line this week for IWM as well. Now on the weekly side of things, you guys remember we've really been talking about this volume shelf here for months now that was acting as supply. We talked last week that, we were starting to poke our head above that area. Volume shelf turning into a launch pad here. So that's something to keep in mind, that we are continuing to move up, and we really need to break that 230, pretty much this 234 area, 234.50, which was previous all-time highs, but it's looking pretty strong. So keep that in mind. Let's look at the week of the year seasonality since 2016. Just curious what that looks like. You can see here that we don't have that 0% win rate for the 26th week of the year for IWM. So keep that in mind. IWM does a little better during that particular week moving forward. Now, VIX, as always, we don't have a ton to look at on VIX. It's not really chartable. We can look at it as kind of a function of, where it's been, how it's doing relative to SPY. The main thing that I'll point out here is, the VIX still has some room to move down. If we're looking at these previous levels before COVID, VIX was way down in the 12s. And so that may seem crazy because the VIX was in the upper 70s back in 2020, but I could see this melting back down to these pre-COVID lows. Now, one thing that I'll also mention, day of the week seasonality is right on the money with VIX. Every Friday, we just melt. This is no different. Friday has the worst seasonality, 23% win rate. But remember, going into Monday, we have the 65% win rate. So, Monday actually had a little bit of a spike here. So Friday, Thursday, Wednesday, Tuesday, we had the decent spike on sorry, I'm looking at the weekly. Sorry, I'm all fired up that the markets. But in general, I think we did have a spike on Monday. So Friday, Thursday, Wednesday, Tuesday, we did have a little bit of a gap up. Then we pulled back. We barely closed red. But all in all, Monday is something to consider with the VIX having a little bit of a spike. But you can see it just gradually declines from there. Now going into the old cryptos. Bitcoin, this is the third week now that we are just kind of hanging out right on this anchored VWAP here. So you can see here, I've got 3 anchored VWAPs kind of using, I don't want to call it the handoff approach because it's not the handoff approach that Brian Shannon teaches. This is more of using previous pivots as anchor points. So you can see here, the COVID lows are our main anchor point here. That anchored VWAP is below around 26K, but we also have this pivot here around 8,900 that I anchored a VWAP from. And then we also have another pivot here from September around 10,000. You can see that both of these anchored VWAPs have been really perfect levels of support over the last couple weeks. Now on the daily side of things here, we do have, if we're anchoring from this previous swing high with the volume by price, you'll see here that we do have a nice little shelf forming here. Bitcoin is one that you really have to take day by day. I mean, one day this can look bullish. In this case, looking at the chart, we do have this volume shelf here. We've got a decent candle, but in a couple days, this could look completely different. So just keep that in mind going into next week. But on the weekly side of things, this is a decently strong candle here. And, these wicks definitely show there's buyers kind of coming in here, or supply is just drying up because everyone's back to break even. So we'll have to see what happens. But all in all, Bitcoin definitely looking interesting. And let's see Bitcoin. I'm just curious. Week of the year seasonality since the 2017 highs. Yeah, going into a little bit of a weak seasonal time of the year with the next couple weeks having a 33% win rate. Keep that in mind. But for now, the weekly candle is looking pretty strong, holding these anchored VWAPs. Last one that we'll look at here is Ethereum. Oh, one thing that I wanted to mention here. If you haven't used the relative volume indicator, definitely check this out. So this is something that was really interesting a couple months ago. So you could see here back in this was back in February all the way to all-time highs that we saw in April. Notice how we had the relative volume indicator, and it says relative volume 20 SMA 1. So we're looking at the last 20 weeks, and we're looking at the 20-week average essentially. And so notice here when it starts to move down, this red shaded area, that means the volume was below the 20-week average. So you can see here, if I start my arrow and I put it up, we're going up in price, but we're going down in relative volume. So we were moving up on below average volume. If you're really getting a strong move up, you want to be moving up on above average volume. In this case, we're moving up on below average volume. So in this case, you can see here when we were really making our move here, we're moving up on above average volume. This shaded area in green means that we're above that 20-week average. Shaded area in red means below. So that was definitely a signal, looking back, to keep in mind. So moving forward, definitely use the relative volume to get an idea of what's going on. You can see here, we did have a spike in the relative volume on the sell-off, and now we are trading a little bit below average, but we're also not really moving here. We're just kind of stuck at this point. So all in all, definitely something to keep in mind with Bitcoin. Now, Ethereum actually had the same exact setup here on the weekly side of things. So you can see here that we had the below average volume on the weekly chart. And so if we align that from February, we're moving up on below average volume. You want to move up on, you're moving up on below average volume. That is not good. However, back here, we're moving up on above average volume. So you can see here, got that green spike just like we saw on Bitcoin. That was a sign that, this is a very strong move. Whenever it's almost like divergence, right? You don't want to have declining volume with increasing price. Those are two things that don't really go together if you want a continuation. So the relative volume indicator is just something that really helps you visualize that without having to look at the volume bars and see, okay, is that above average? Is it below average? This is just a really easy visual tool to do that with. Now, on the daily side of things, if we anchor the volume by price from the all-time highs, you'll see here that over the last couple of days, we were hitting supply. We were hitting this supply shown by the anchored volume by price. And you can see that we didn't even get to the anchored VWAP this time. So actually we did. I take that back. On Monday, we touched it. We couldn't get through it. And then as we moved down, we tried to move back up through the supply zone, couldn't do it. And now we're possibly, you can see here that this volume is starting to poke out. This wasn't here a couple days ago. So anytime you see the volume by price starting to poke out like this, that means that there's volume coming in and aggregating at that level. So the fact that I have seen this volume bar grow over the last couple of days makes me think that maybe we are getting some volume aggregating down here and somebody's loading up. So something to consider. Going into the next couple weeks on seasonality side of things, week of the year seasonality, since the 2017 highs, we are going into a pretty weak time of the year. The 26th week, I don't know what the deal is with the 26th week of the year. 0% win rate for this one as well for Ethereum. So keep that in mind going into the next couple weeks. We do have some weird seasonality for some of these names on the broad market side of things. So that is all. That is the broad market recap. And let's move on to the next segment. All righty. We are going to go over some individual names today with Xavier, aka JuicyTradez. Xavier, thank you so much for joining. I'm glad to have you on as a first-time guest. What are you looking at into the next week or week and a half plus in the markets and into the rest of the month of June?
So again, thank you for having me on. What I'm going to be looking for mainly, and what I think every trader should really focus on, is the direction of overall market. So what I have in front of you right now is SPY. It's the ETF that follows the S&P 500. I'm going to run through this kind of quick, so keep up with me here. If you go ahead and look, we're in the uptrend. This is a symmetrical triangle. What I'm looking for, more importantly, is a break above the 42336 level. All right. But in addition to that break, I kind of want to see some volume step in. Over the last couple of days, we've been stuck in this range. We had a couple false breaks, but we have a lot of market conditions that are approaching. So we have OPEX coming up next week, quad witching coming up next week, and we have the dreaded CPI report coming up tomorrow with rumors that it's supposed to be hotter than usual. So what I'd recommend is looking at the higher time frame. So we're going to go ahead and take it back out to the weekly here. This is SPY, still the same chart, just on a higher time frame. And again, pretty much the same thing going on. You got a nice uptrend above all your moving averages. Volume starting to die off, but again, that's 423.56 level is still in play. And if we were to go out to the monthly chart, now I know a lot of traders would like to say is that this is overbought or overextended. I like to say the market doesn't really get overbought. It just does what it does, right? You can't tell the market is overbought. And they're going to say that because we haven't seen a low since October, and we've been straight up ever since then. But again, you see these wicks to the downside. Buyers are still here. So to paint a perfect picture for you, we've been trapped in this range. We need to break out of this range. And once we break out of this range, you can start to see some more volume coming into your bigger names. If you guys trade the bigger broad names, such as Apple or your Amazons or your Netflix and Nvidia, you're going to notice that we've been chopping. And this is why, because we can't really get out of this particular wedge. And once we get out of this wedge, probably after quad witching, I'm going to be looking to hit it hard. And I was talking to Jake before this. I wanted to go ahead and give you guys just some insight on what I really do. When I swing, I primarily swing the indexes. When you look at the chart of the indexes here, the majority of the time you are in an uptrend, right? You're catching a basket of the powerful stocks, those powerful names that are leading. Once they get trending, pushes this market up. So instead of me trying to pick and choose the right one, I get one basket and I ride that whole basket up. So I take bigger sizes in these indexes. This is a setup that I would particularly take if it breaks this particular level, and I slowly add into some of the smaller names. So one of the smaller names that I'm going to be watching is the wheat sector. Now today, me and my team, we caught a nice little day trade here, but because the overall market kind of shook the tree a little bit towards the end of the day. Towards the end of the day, everything just sold off. So I was actually stopped out for a nice little 30% gain. But at the end of the day, if Tilray can get back above 23.23 here in the day chart, we have a lot of room up. More importantly, I'm going to be looking for this to actually get back into this 28.14 level. And watching the order flows today, I've seen a lot of big orders coming into ACB, which is also another marijuana name. There's the MJ ETF. There's another one called Pot X. There's a lot of order flows just hitting these weed names. So again, I like to see the higher time frames. If we were to bring this back out to the weekly, you have a falling wedge that did break here. So that's also bullish as well. And if I like to go out to the monthly as well, kind of have that same wedge forming, bouncing off these moving averages. I would like to see the weekly get above that get above the 24 area basically before we continue. Another one that I'm watching here too is ABNB. Let's go down to the daily. We've been stuck in the range. So on a shorter term perspective, I like it when stocks do this, because when they get stuck in this range, the longer it stays in this range, a lot of times the bigger the move out of the range is. Okay. So I'm going to be looking for this to basically break 152, right? I know I have this at 150, 190. So just call that 152. But something I do want to point out, I'm not sure how you guys use volume profile, but when something breaks out and this volume profile dies off right here, to me, that says there's less sellers in that area. There's going to be less resistance for it to go. So if it breaks this 152 area, I'm going to be looking for a straight shot to the 157 area on the short term. Now, looking at the higher time frames, we get a little choppy here. Again, if you break that 150, 190, you still have some room up. But looking at the monthly time frame, it's a little off for me. It's a little weak right here. And you're still inside this whole dynamic, crazy range of a bar. So for me personally, I wouldn't be looking to long-term ABNB, but for all my day traders, and I'm a day trader at heart, ABNB setting up for a nice short move. Now, the big win of the day for me and my team was CLF. And me as a day trader, it's going to sound funny to a lot of people. Half the time, I don't know anything about the company. If it hits my scans, it gives me a setup. I don't care. I'm getting in and I'm taking it out. This was the big trade of the day, but this broke off and I'm still holding a small lot in these particular one. Now this blue level, let's talk about this blue level right here, because it's obvious that we broke out of this, but the blue level comes from the monthly. I'm gonna jump straight to the monthly. Okay. That monthly level broke. And in my opinion, this is what caused this big pop to come. Now, where we're going to go, in my opinion, we're going to go test this 200 moving average in the 27 area. So going back from the monthly to the weekly, again, the same setup that was on the daily. MACD's coming up, volume's pretty steady. And going back to this is the weekly, going back to the daily, you have that breakout. So I look for that multiple time frame alignment is what I call it. Monthly, weekly, daily, they all line up. You have a high probability of your setups actually continuing. Another one I'm watching is going to be Workhorse. It hasn't triggered for me yet. A lot of rumors about Workhorse buying out some factory that Rod has. So there's a lot of rumors going back and forth. I can't confirm anything here yet, but what I'm looking for, again, these blue lines are from the weekly or the higher time frames, is a break of this 1869. So again, bringing it back out to the weekly, that's that level right here, 1872. Sorry, not 69. But if we get above this 50 moving average, we're going to go. In addition, looking at the weekly, there's that drop off of that volume profile. So for me, I really like that when you have less buyers and sellers in this area. And going out to the monthly chart, again, that's a nice reversal here. And again, you are looking at that volume profile starting to die off. So Workhorse, looking at a chart, theoretically, I'm going to be drawing a price target up here, but on live TV, I don't want to call out a crazy price target like that, as you know, because you know how people get. So again, I want to be looking for this to go to the 2018 level, right? And last, what else am I watching here? I'm watching Amazon. I'm not watching Amazon in a way to go ahead and buy and get in. I just want to point out something too. Amazon and Apple are basically like the dominators of the QQQ. Okay. The whole market could basically be down. If Amazon and Apple are up 2%, Qs would probably be break even or if not higher. And this is how weighted they are. So I really pay attention to these two names a lot just to see where they're going, because they're going to determine the direction of the QQQ. Now, I want to see, this was a wedge break, but this weekly level 3304 was right there. For me, by the time it broke out and closed and got above that 50, it wasn't worth the risk because it was so close to this 3304.83 level. So for me, I was like, nah, I'm not going to mess with that. So going to the weekly level, here it is. This is the top of this range that's been stuck in. So I'm going to wait for a break of that range for it to move to the top of this particular candle at 3367. All right. So if I was to bring that down to the monthly chart, again, it was still stuck in this range inside of a bigger wedge. Now, I like to point out something, just like Tesla, and I'll go over that here in a second. Amazon does the same thing on the higher time frames. It's a wedger, is what I like to call these stocks. They wedge up, yeah, and they go. They take off. The only thing I don't like here on this monthly, now a lot of people are like, I don't use indicators. I'm not really big in indicators too, but I really like momentum. Like, I'm a momentum breakout trader. So it makes sense for me, somebody who trades like I trade, to have that MACD on my side. So when you get a breakout plus that MACD, usually you get that launch, right? So if you was to look here on this first wedge, when you got that breakout, you had that MACD accelerating, but now we're coming back down. So it creates a lot of confusion here. It's a lot of conflict. So Amazon right now is showing signs of strength, but the question is, how strong can it be with all this stuff, and how range bound it is with the momentum dying off? So for me, I'm going to be saying that the QQQs is going to chop around going forward. Okay. But one tech name I do like is Google. Google is a great swinger. If you guys ever swing trade, I definitely pay attention to Google. Again, you have a wedge coming in. Sorry about, I have a puppy. He's really fast. My wife can't control him. Like,
hey, no worries.
Like,
he's just saying hello.
He's trying to get in here right now. So yeah. So daily chart, setting up the breakout. Weekly chart here. You got a clean uptrend coming. I'm looking for a new all-time high to actually get in. Google is when I'm actually going to be looking to play. If we can get above 2433, provided CPI comes in, provided we don't have any crazy events happen doing quad witching next week that takes the market lower. I'm not saying that's going to happen, but weird things happen doing next week seasonality wise. And lastly, but we have the monthly going till. So again, you got hammers coming in on the bottom. You're straight up. We can continuously go higher. If this hits a new high, MACD's in position, I think this goes higher. And we'll be looking for this to go to 2,600. Actually, Google was my biggest swing of the year. Okay. But
nice.
yeah, what else? What else am I watching here?
What moving averages are those below? Are those, is that just the 200?
So this one is the 9 EMA. Right. So I kind of
the yellow one. What's the yellow, like the yellow and the white one?
So this is this one is the 200 and this one is the 100. These are simple too. Yeah. So I kind of use, a lot of people use the 10. I use the 9 EMA as a tracker. Like when I get long something, I want price to be above that, because price is always going to come back in and check in with this moving average. I don't care what nobody says. You can say whatever. It breaks out. It's coming back in to check. And this makes a great buy point at times too as well.
Yeah, it's holding pretty well. And then I see you've got the relative volume indicator there as well. So you said you're really a relative volume trader. Are you looking for, relative volume above a 20-day period, or is there a specific kind of relative measurement that you're using for volume, or is it just the previous day? Or
so for me, I have the 20 period 20 period relative volume indicator in here, but I use it for day trading primarily. Swing trading for me, volume isn't, it's important, but when you're day trading, that relative volume has to be there. Like I'm not getting in trade without it, right? Because I'm going to be in short term, and I'm mainly using shorter term options contracts. So for me, again, this was Tilray on the day chart. When we did snag above this 22, 23 level, which by the way, I hooked up. I'm not sure if you saw the messages back and forth between me and TrendSpider. I was able to hook up the alerts to my Discord room. So every time it hits, it goes directly to my Discord room, which is pretty cool. But once we hit that level, if I bring it back out to the 5 minute, we had this wedge. I got right in. Relative started to step back up. So I know it doesn't look much from a retrospective because we've already passed this. But intraday, when nothing was to the right of the chart, to see that relative perk back up a little bit, I got into the trade and above this level, and the volume kind of stepped up here as well. So I actually got into this trade. I scaled out a half my profits here, and as soon as that red candle came, and I just said this in a Twitter Spaces event, because of the SPY and how stuck we are, there's no need to be a hero. There's no need for you guys to be trying to get 200, 100% gains. Just get gains into your pocket, scale out bigger portions, and cut your trades quicker, because this market will humble you until it breaks out and get back into a trend. But once this candle popped out, I got right out, and you saw how the relative died. Give you a better example of a trade I took that had it. This was Tesla. This was a couple days ago. Hold on. Work with me here. It's not that one. Here it is. All right, here we go. This was the juicy one from a couple days ago. So Tesla was flat. Once we broke down from this wedge, you guys know I love wedges. Once we broke down from this wedge, that relative popped up. I was like, okay. And the MACD came through, higher time frames had the exact same thing. So I went ahead and entered here, and I tried to sell out in this area, but TD Ameritrade, as you know, sometimes they don't like to fill your orders, but I couldn't really get out into this particular area here. But that relative volume, I love it, because that relative volume, for anybody that doesn't know, relative volume is just saying over the course of whatever period of time you specify, volume is trading more than usual, right? So if you think about it in a basic standpoint, right now, at this given point in time, the volume is the highest it's ever been right now, right? In the charts breaking down. So when you put those two together, you almost always get some type of move. So for relative volume, for me, I'm always applying it to my day trades. Now, swing trades, I would like to have it there, but it's not a requirement for me.
Got it. Makes sense. Well, to wrap it up, tell us a little bit about your community. How can people find you on Twitter, all that good stuff? And, where can people maybe reach out and learn more about your community to possibly join or just get more information?
So www.JuicyTradez.org is my website. Am I allowed to bring it up here?
Yeah.
Yeah. So JuicyTradez.org. If I was to just, you can just hit me. You can just come in. You can message us down. There's a sample place where you can actually get in, or you can follow me here on Twitter. I provide a lot of content on Twitter, like free charts, free chart sessions, like me going over charts like I was just doing with Jake. I provide a ton of free content, webinars, Twitter Spaces, which is the new thing that's going around Twitter. If you haven't seen them, they're pretty cool. But follow me here. You can email me at JuicyTradez at gmail.com. Those are the best ways to get me. But about my community, we're a group of traders, day and swing traders. We do everything through Discord. I have a lot of automation, so I have a lot of algorithms doing hard work for you. So all you have to do is sit back, relax, and all the algos pretty much do it for you.
Love it. Love it. Well, it was great to finally have you on as a guest. I'm sure this won't be the last time. Thank you so much for showing us around your trading style, what you're really looking at. And remember, if you want to follow Xavier on Twitter, definitely give him a follow at JuicyTradez. And let's move on to the next segment. Thank you so much again, Xavier, for joining us.
Thank you for having me, Jake. Have a good one.
Alrighty, let's look at the weekend chart request. Remember, we do a poll every Friday of what charts you want to see. I generally will just do a post, pick a chart, go. And the stocks that get the most requests, that's kind of how I choose these. So if you do want to see a stock on these videos, make sure to comment in those posts and you'll be able to kind of possibly add another tally to a ticker that you want to see. In this case, we've got Zoom, we've got Tilray, Fubo, PLTR, SKLZ, and SDC to go over this week. Starting with Zoom. Zoom is zooming over definitely towards the end of the week, just absolute ripping to the upside. On the daily side of things, you can see that we do have this anchored VWAP above. Now you'll notice that the anchored VWAP is pretty thick here. What I've done is I've added offsets. So if we make this a 0% offset, you'll see here that there are times where the candlesticks are breaking through and not respecting this perfectly. So what I can go in and do is I can add an offset, and it's really interesting. A lot of the time, price will respect that offset multiple times. So if we look at the 5% offset above the anchored VWAP, you'll see here that this is pretty much the perfect level that has also been respected. So the VWAP's been respected, but also about 5% above that, shown by this thick red line. So if we do continue up, definitely watch this area to be a level of interest above, possibly for some break-even selling, because remember, the anchored VWAP is essentially telling us where the average price per share paid is from a specific point in time. The average price per share paid is way up at 395. We're at 366. So the average share transacted since this high is holding at a loss. That's the way to look at that. And that's why we'd see supply up here, because as people break even, they may sell some shares. Now, on the weekly side of things, you can see here that we've got this beautiful breakout, really strong candle here. And one thing that I'll mention here, going into more of a granular seasonality, day of the week seasonality, Thursday and Friday definitely have the strongest win rates here with a 65 and a 64% win rate. You can see here Thursday and Friday both had very strong days. And so keep that in mind. Notice that Wednesday had a pretty rough day. Wednesday is the weakest day of the week. So seasonality is something that is incredibly powerful. You need to be using it with your technical analysis. It just completely changed the way you're looking at the market. It's not just one-sided. You're looking at multiple perspectives here. So Zoom, beautiful breakout. If we anchor VWAP from the swing high, once again, this is the swing high, but if you want to see it again, all I did was right-click from this all-time high candle, and you'll see that 395 to 400 is that area above. So keep that in mind going into the weeks ahead. Going into Tilray, this one disappointed some people this week. It was a pretty strong week, and then we just got rejected at this resistance. I mean, there's no other way to put it. You've got this resistance. You had to move through it intraday. You closed right at it. The thing that I thought was interesting, though, is if you turn on the raindrop chart, there was quite a bit of volume above the resistance line. So to me, I still think this is looking pretty strong. We'll have to see. I mean, if you look at the weekly side of things, we have had 4 green weeks in a row. You know, I do look at that kind of how consistently we've been red or green. 4 green weeks in a row, something to consider. But the fact that we did have some volume supporting price above that resistance line is something to consider for the bull case. And obviously, this would be the area we need to break above going into the weeks ahead, as well as this anchored VWAP, which is right around 21.25, and that's pretty much right in line with this resistance. So you kind of have confluence of trend line resistance and the anchored VWAP resistance as well. So we'll have to see what happens going into the coming weeks. Now, going into the next one, Fubo. This is one that everybody loves again all of a sudden. Fubo is one that does have a gap above. So I do have the gap highlighted here. Remember, all you need to do is turn on the gap snake and you'll see all of these gaps easily without even having to look for them. I'd already turned on the gap snake. That's why I have it highlighted. So sometimes I'll just use it to highlight it, and then I'll just turn on the annotation tool and annotate it, and then turn off the gap snake. So however you want to do it, but this thing has saved me a lot of times when I didn't see a gap above or below, just because it was hard to find. So if we anchor the VWAP from the 2 swing highs here, back in early February and then back on January 27th, you'll see that we're trying to get through this supply zone. So far, we're doing pretty well. On the weekly side of things here, you can see that we did break out of resistance on the price action side of things. Now, the more interesting thing is the anchored on balance volume. So this anchored on balance volume is new. What I did here was I just right clicked and I clicked create anchored OBV here. So I started the on balance volume from the high here, and notice what we're also seeing. We're seeing a breakout on the on balance volume as well. So not only in price, but on balance volume. That is very bullish going into the weeks ahead. And remember, this area, these 2 anchored VWAPs are the area that we really want to get through. If you look at the raindrop for Friday, a majority of the volume was at the top of the range, or at least the top 50% of the range. So that's something to consider as well. And a decent weekly candle there. So Fubo, not looking too bad. PLTR, another one that everybody has fallen in love with again. A couple things here. One, if you look at the anchored volume by price from the all-time highs, remember, all I need to do is just move this over to this candle. Volume by price changes. This was an area that we were talking about a couple weeks ago as supply. So as we were moving up from the high teens, this area initially acted as supply for like a week and a half. Now you can see that it's actually acting as a support zone and prices respecting this area. So that is a very strong sign that the tides have kind of flipped here. And the main thing after we kind of bounce above this volume shelf here would be this anchored VWAP right around 25 or so. Now, one of the things on the weekly side that's really nice to see is the fact that we did close above the IPO anchored VWAP here. So anchoring the VWAP from the IPO, you can see that we did have a nice open and close above the blue line here, which is that anchored VWAP. Also, you can see here a nice little case study using divergence with regular candles. So if we turn this to the hollow candle and you look at Thursday's close, it was red. It closed below Wednesday's close. Now, if you look at the raindrop, it was a green raindrop. So you had this divergence where you had a red close but a green raindrop, and you had very strong seasonality going into Friday. Friday is by far the strongest day of the week for PLTR so far in 2021. No different this Friday. We had a nice move up. You can see a lot of volume backing price at the top of the range here. And so really, really nice price action going into the week ahead. And something to consider, though, we have had 5 green weeks in a row. Last time we had 5 green weeks in a row, we did have a pretty rough week the week after. So keep that in mind on the bearish side of things. Remember, you always want to have 2 perspectives, bullish and bearish. You don't want to be blinded by your bias or your position. So if you were looking at more of a bearish side of things, keep in mind that, 5 green weeks in a row was kind of the max here that we've seen in the past. Could be different this time. We'll have to see. Going into SKLZ, another favorite in the past and back to it now. A couple things here. If we anchor the volume by price from this high, you'll see here that we have this kind of has acted as a nice little shelf as price pulled back. So that's something to keep in mind. And another thing here too, kind of what we just talked about on PLTR, at least here from the all-time high, or the kind of this reversal candle. The all-time high was in early February. The reversal candle was the week after that. So I'm anchoring it from the reversal candle when things really switched up and changed. We did close above that, opened and closed above it. So keep that in mind. And just kind of a little pullback to test this previous area of resistance. I mean, if you look at the anchor VWAP from the high, it's acted as resistance multiple times. So as we saw in IWM in the earlier segment, you want to retest these breakout zones. So we broke out, pulled back, bounced right above it, and we have a nice green raindrop for Friday. So something to keep in mind going into the week ahead on SKLZ. Going into SDC, one thing I wanted to point out here on the relative volume side of things. you can see here that we pulled back over the last couple days, but notice how the relative volume is going down. That means that we're pulling back on below average volume, below the 20-day average volume. That's what you want to see. You don't want to see a pullback on higher than average volume. You want to see a low volume pullback. That's exactly what we got. And you could see that here on the relative volume indicator using TrendSpider. So that is something that does make me think that this could be just a little bit of a pullback consolidation phase for SKLZ. We'll have to see. SDC, probably one of the best case studies of the week on supply zones using the anchored volume by price. So you can see here that if we anchor from this high here back in January, pretty much all these volume by prices and anchored VWAPs are from the early 2021 highs. We moved up right to this supply zone above, pulled back almost perfectly. You can see here if we anchor a VWAP from this area, we pretty much moved up right to that area as well. So we had confluence of the supply zone and the anchored volume by price. And then on the weekly side of things, you can see here that we did try to break through this, this resistance zone. If we did move up again, this would be an area to watch. So right click, create an alert on this area for a breakthrough. You don't have to watch the chart. TrendSpider's alert system is going to watch it for you. And when it does break through, you'll get the alert. So that is all for the chart request. Hopefully this was helpful for everyone. Definitely some interesting setups going into the week ahead. Remember to like and subscribe if you enjoy these videos and these episodes. And remember, we do have another one coming up next Sunday, so tune into that. And if you have any questions, we do have, as I mentioned, as always, the customer success team, but the DMs are always open on our Twitter account. And yeah, everybody have a great rest of the weekend, and we'll see you next week.